Rohit Kumar Singh wants to know, when should an investor invest in index funds, in a bull market or during market falls?
Well, the bull or the bear phase of the market has nothing to do with your decision to invest in index funds or not. First and the foremost is that you should have a long-term horizon, and you should be able to withstand the ups and downs that the equity market is bound to deliver over a long time frame. So those are the foremost preconditions that one should keep in mind before deciding about investing in equity in the first place, whether active or passive. Now, talking specifically about index funds, they certainly have some advantages to offer. One is the simplicity of choice, because while choosing an index fund, all that matters is a combination of low costs and a low tracking error. So that can be of great appeal to a new investor who wants to save himself from the stress of or the nuances of going about choosing a fund. An index fund greatly simplifies that choice for him. So that's one. The second is they are also very suitable for a conservative investor who is largely looking to get exposure to the large cap segment of the market, because that's a segment where index funds have done fairly well, and the actively managed funds have had a tough time matching up to the returns of the index funds. In fact, if you look at those comparisons, if you look at the performance of actively managed funds in the recent years, you would notice that 2018 was a watershed year in that respect, when virtually none of the actively managed large cap funds were able to beat the Sensex. Now they've been able to claw back their way a little bit in the subsequent calendar years, but still the number of outperformers is lower than the underperformers. So from that perspective, certainly index funds have been giving a tough time to the actively managed funds. And certainly one area where actively managed funds cannot match up to the index funds is in terms of costs, because with an index fund, you can get a reasonably diversified exposure to the large cap universe of stocks for as low as 10 to 15 basis points of costs. So that is a big advantage. And therefore, for investors who are looking to get exposure to the large cap segment of the market at wafer thin costs, index funds can be the way to go.